What's going on, guys? Welcome back to the channel. My name is Matt. We got some big news today, and I'm excited to dive into some recent economic news that definitely impact all of us in the real estate mortgage space. Okay, so we're talking about inflation. So the inflation numbers in Canada came out, and this is what it means for our finances moving forward. So Canada's annual inflation dropped to 2.7%, down from 3.9% in May. This decline was primarily due to slower growth in gasoline prices, okay? While the Bank of Canada had expected a 2.8% rate, the actual figure of 2.7% was a pleasant surprise, okay? Now let's break it down a little bit more. The drop in gasoline prices was definitely the key factor in this decline. So gas prices can be quite volatile and have a significant impact on the overall inflation rate. Seeing slower growth in this area, it helps bring down the overall numbers, but it doesn't mean that all areas are experiencing relief right now. Now let's talk about how this affects the housing market. So despite the overall cooling of inflation, mortgage interest costs have surged by 22.3% compared to last year. Okay, this is a significant increase, reflecting the rising cost of borrowing that we're all aware of. Additionally, home and mortgage insurance costs are up by 9.2%, and rent has increased by 8.8%. So while inflation is cooling, housing expenses are still climbing quite a lot. And obviously, as a mortgage broker, I see firsthand how these rising costs are impacting people, right? I see it on a weekly, daily basis. Many clients tell me they find it increasingly difficult to manage their monthly budget and their monthly expenses due to higher mortgage payments. The increased cost can be a major hurdle. So it's important to keep these factors in mind when planning your finances. Bank of Canada aims to keep inflation within a target range of about 1 to 3%, right? And we've been within this range now for 6 consecutive quarters. With the recent dip to 2.7%, there's a lot of thought and speculation that the Bank of Canada might adjust interest rates down now in a higher rate and a higher percentage of it coming down on July 24th. Some analysts believe we might see a decrease to further stimulate economic activity, right? Because if the Bank of Canada leaves these rates too high too long, it's going to start to really damage the economy too much. And this thought process is very interesting because it indicates that the central bank is closely monitoring the situation, as they should. Lowering interest rates can help alleviate some of the financial pressure that's really appearing on households, on businesses, on individuals right now, potentially boosting economic activity. However, it's a delicate balance. They have to be careful because the bank needs to ensure that inflation doesn't pick up too quickly again. Overall inflation is cooling. Core inflation measures tell a different story. Okay, the 3-month moving average of core inflation, which excludes stuff like food, energy, rose to an annualized 2.91%. That suggests that underlying inflation pressures could remain and could influence the upcoming decisions. So it's something we have to keep our eyes on. Doesn't appear to be happening right now, but could happen. Core inflation is an important metric because it provides a clear picture of long-term inflation trends. The fact that it's rising indicates that there's still some persistent inflationary pressures in the economy. And this could be due to various factors such as supply chain issues or increased demand for certain goods and services. And of course, market analysts are watching these trends very, very closely. The recent inflation data has led to some that believe that the Bank of Canada might actually pause its rate hikes sooner than expected, right? While others caution that persistent core inflation could mean more tightening ahead. Central bank's actions in the coming months will be critical in shaping the economic landscape in Canada. And definitely, as someone who keeps a very close eye on the market, I can tell you that these predictions are always evolving, right? Whether the Bank of Canada will cut, whether they'll raise, whether they'll hold, depending on all the economic releases that come out on a weekly basis. So it's always changing, and it's important to stay up to date behind the rationale of what they're thinking, what their decisions might be. And keeping up to date with all this stuff can help you make better decisions when it comes to your mortgage, when it comes to real estate, and different parts of those investments. And I'm seeing these trends play out in real time. So higher borrowing costs are definitely affecting affordability, slowing down the housing market, right? As we've all seen. But let me share a little story that I've seen. So one of my clients was looking to buy their first home, and they were initially concerned about high interest rates. However, with the recent cooling of inflation, I just spoke to them and they're starting to feel a little more optimistic about their budget, about the possibility of finding a suitable home within their price range, because if rates do come down, this is going to increase their purchasing power. So just a little bit of an insight there that, even with this inflation news, it's getting people a little bit more positive about the direction of interest rates, about the direction of home prices, about people's budgets. Now, for those of us in the mortgage industry or the real estate industry, these inflation trends have direct implications, okay? Higher borrowing costs affect affordability and can slow down the housing market. On the flip side, cooling inflation might ease some pressure on household budgets, potentially balancing market dynamics. So if you're considering buying a home, refinancing, making a purchase of any kind, it's definitely important to stay up to date on all these trends. I'd love to help you out if you need help with any financing, buying or selling of real estate in the GTA area, also Simcoe County. Definitely always here to provide advice and support to help you make the best decision for your future. I will leave all my information down below for you to check out. And of course, please like and subscribe, guys. If you guys like it, really helps me push this type of content to people who might really benefit from the information. And of course, subscribe to stay informed about all these different economic releases. I'll continue to keep you updated on how these things impact the mortgage market, the real estate market, people's thinking throughout the process. And until the next video, guys, take care.